Hello and welcome to Mukoya Finance. My name is Saharuddin and I'll be your tutor in this class. In this tutorial, I will explain the guidelines that banks must follow before applying a charge to a customer's account if a customer fails to make a loan payment on the due date. When you take a bank loan, the repayment is spread over multiple periods. If you are unable to pay at any of these periods, the bank may apply some additional charges, which are called default charges, on your account. However, there are certain guidelines that the bank must adopt before they apply these charges or eventually resolve in the sale of a customer's collateral, which is usually a house that belongs to the customer, to recover their money. The process of a bank selling a customer's house to recover money is called foreclosure. Banks shall notify customers within 3 days from the first day of default through the agreed medium that a default charge will be applied on the account after 7 days from the date the obligation becomes due. Customers of institutions other than deposit money banks shall be notified on the first day of default that a charge will be applied on their account after 3 days from the date the obligation becomes due. The default charge shall be disclosed in customer statement of account separately from the interest charge. The banks, however, have certain rights after adhering to these guidelines. To ensure that debt recovery processes are transparent, courteous and fair, devoid of undue pressure, intimidation, harassment, humiliation or threat, banks shall engage and give customers notices of outstanding obligations prior to the commencement of a debt collection. Banks shall initiate foreclosures only when other recovery steps have been unsuccessful. Banks shall give customers the option of a private sale to be exercised within 30 days before commencing foreclosure, except where the customer waives the rights. Banks shall also ensure that the net proceeds from foreclosure are immediately applied to the loan account and customers informed of any balance. Banks shall also provide customers with a report of the sale of the collateral. At a minimum, the report shall state the process, proceeds, incidental expenses, and the net proceeds. Banks shall be liable for the actions of their agents engaged for debt collection. Banks shall also not engage in any of the following. 1. Contact friends, employer, relatives or neighbors of a customer for any information other than information on employment status, telephone numbers or address, except where the person has guaranteed the loan or the person has consented to be contacted. 2. Require any of the persons listed in A above to offset the debt, except where the person has acted as a guarantor. 3. Make telephone or personal contact with customers between the hours of 9 p.m. or 8 a.m. for the purpose of debt recovery, except with the prior consent of the customer. And this brings us to the end of this video segment. In the next video, I will explain how bank customers can lodge a complaint with their banks when they have a problem with any of the banking services offered. If you have learned anything new today, please drop a comment, like, and subscribe to my channel in your quest towards understanding the banking services in Nigeria. See you in the next video.